Hi, Rob Sago with Remax Platinum, and I'm here with Arez Shimoni of NJ Lenders.
Hey Rob, how you doing?
Very good, Arez. Thanks for joining. We are actually going to be doing a series of different mortgage types to give you some informational content on just going through the process and maybe clearing up some questions that you may have. Hope you enjoy. Arez, another question I get quite frequently: mortgage insurance. When is it required? What it is exactly? How is it calculated? Can you get into that a little bit?
Sure. So mortgage insurance is always required on a conventional loan if you're putting less than 20% down, as well as an FHA loan.
Okay.
20% is your magic number.
Okay.
Some buyers feel like paying mortgage insurance is a penalty, and I try and have them think of it as not a penalty. It's just that you're choosing to maybe put less money down to have a little bit of a higher payment.
Right.
So mortgage insurance can be paid in multiple ways, which a lot of buyers don't realize. Your typical one is monthly.
Right.
And the mortgage insurance is based off of your down payment and what kind of credit scores you have, right? That's how they calculate the actual amount.
Okay.
So you have your typical monthly mortgage insurance. You have something called single premium where you pay it up front as a one-time fee to eliminate the monthly. And sometimes that could work to your advantage depending on the situation.
Oh, sure.
And then your third one is called lender paid mortgage insurance where you actually get a higher interest rate but no mortgage insurance.
Right.
So depending on where the buyer is, as far as how much cash they have in the bank, what their monthly payments are, I can present multiple options when it comes to the actual benefits of which way to go.
Right. I actually didn't even realize there were that many options available for mortgage insurance, different ways of paying it. I had no idea. Now, how do you get rid of mortgage insurance, or what's the quickest way to get rid of mortgage insurance?
Okay, so that's a great question. So if you're going with your monthly mortgage insurance, once you reach a 22% equity position, your mortgage insurance will drop off. That's pretty much a law. So once you reach 20%, it will actually drop off. When you reach 20% equity, you can request the lender to drop the mortgage insurance, and the lender can do that. If someone also wants to prepay and expedite getting to the 20% equity, let's just say someone says in the next 2 years, I'm going to prepay $50,000 to get that much more equity.
Right.
That person can get rid of the mortgage insurance early, but the lender may require an appraisal to make sure that the value has not dropped.
Right.
So depending on the borrower's goals and whether they're going to be aggressive or not with paying the mortgage, extra payments, will determine which way is best for them. So it's not for life, it's not a penalty, but it just costs a little bit more money. The better credit scores you have, the less it costs you.
Okay, but under 20%, mortgage insurance is required.
It is. Now, on an FHA loan, mortgage insurance is required for the life of the loan if you're putting less than 10% down.
Okay.
And that used to be different. It used to be that you can get rid of the mortgage insurance after 5 years and when you are 22% equity.
Right.
And if you have more than 10% on an FHA loan, the minimum time that you have to keep the mortgage insurance is 11 years. So it costs a lot more money. So a lot of times that first-time home buyer will start with FHA and then they'll refinance to a conventional loan because eventually they can get rid of that mortgage insurance.
That's very important. I didn't know that detail either. Thank you so much, Rez. Appreciate it.
You're welcome.
I know this was a lot of information to take in, but if you have any further questions, please feel free to contact us and we'll be happy to help. Thanks.